Well, one of the questions that comes up is, what do I submit for forgiveness? And if I'm self-employed, or if I'm a sole proprietor, or an IC with no W-2 employees?
Yeah, so lucky, I guess, for this group of individuals is when they issued the guidance on how to even apply for this loan, because on April 2nd, when we were first applying, this guidance didn't exist for how a self-employed or a sole proprietor or an independent contractor would even submit this. So when they came out with this guidance and they told us how to submit for it, they actually gave us forgiveness guidance in that document. And it is the most clear guidance around forgiveness, in my opinion, that exists. So if you are that self-employed person or that sole proprietor, you had to prepare your draft Schedule C, which is the tax document that shows all your business income and expenses for the year. So you had to prepare that for 2019 in order to get the loan amount. So you know what that net income amount is. And the guidance that they gave us around this is, in order for, how do you pay yourself, right? Because you're not a W-2 person, you're not looking back, and most business owners don't pay themselves the same way every month or anything like that, unless, you know, they're actually on payroll, which they would be in a separate category. So what they provided is that profit that you said on your Schedule C, that was your profit for all of 2019. So that represents a year of profit for you. Divide that number by 52 weeks and multiply it by 8. And then that's what you're allowed to pay yourself over the 8 weeks. So they were trying to make it comparable to a W-2 employee, and that's the way that they thought that it was the easiest to do that. So that your forgiveness document is that same Schedule C that you prepared. If you still don't have your tax return done yet, it's that same Schedule C that you used to get your loan is now your forgiveness documentation as well. So for that, it actually made it a little easier.
Okay.
So I think I want to walk through our example, because the example is around a Schedule C self-employed person. And I think that will also help. So on my screen here, I'm showing this example. So this is a self-employed or a sole proprietor who files on their Schedule C and doesn't have any W-2 employees. So on that Schedule C, they reported net income for 2019 of $48,000 total. They had a telephone deduction for $1,200 and an internet deduction for $1,200. There's no retirement on Schedule C and no health insurance on Schedule C. So quick point about this is, for these individuals, they may be paying for their health insurance personally, and that goes on their page, a beginning page of their tax return. It's not on the Schedule C. So the way this guidance reads right now is, if it's not on your Schedule C, your PPP funds cannot be used for it. That's why I made it clear that these numbers aren't on there. Some self-employed individuals have that information on their Schedule C. That's the way they file. And so if it qualifies, and then it would be here. So it's based on what's on your Schedule C. And if people have questions about that, their tax preparers can definitely help them answer that. So when you submitted this information, your loan amount calculation took that $48,000, divided it by 12, and then multiplied it by the 2.5. So you would have been approved for a $10,000 loan in this example. So the way the calculation works right now for forgiveness, based on the guidance that we have, is the payroll for the owner, what I just told you, take that Schedule C net income of $48,000, divided by the 52 weeks, multiply it for the 8 weeks, and you're able to pay yourself $7,385 for your 8-week period. So that's the amount that you're able to pay yourself. If this amount is above $100,000, you're capped, just like everyone else, and you can't have more than $83,33 per month. So it would be $16,666. Once you're doing that, now you're got to comply with those same tests. So the first test is the head count test, the employee count test, whatever you would like to call it. So do you have the same head count on June 30th as you did on 2/15? If it's just yourself, yes. You had one then, you were the owner, and you have one now. So you've passed that test. So you can put a little check next to that box. The second test, did you pay at least 75% of the wage that was earned in the previous quarter? And they say full quarter because some companies laid off mid-March. So you can't really compare to your quarter 1 of 2020. You would have to look back at your quarter 4 of 2019 to make sure that the 75% was met. But in this case, I'm paying myself according to that formula. So yes, I have met that criteria. So for maximum forgiveness of the entire loan amount, if you got the 10,000 and you were thinking, I'm going to get forgiven for the whole 10, you'd have to spend at least 75% on payroll, which would be $7,500. But that calculation above limits you to $7,385. So here is an example where this individual cannot, it's not possible for them to receive 100% forgiveness on this loan because they are capped by how much of their pay, and they had no other things like retirement or health insurance or the taxes to be able to put here. So then the only other items that are eligible for forgiveness under this loan program have to be deductions on that 2019 Schedule C. So in this example, the owner had a telephone and an internet expense. That was $200 per month. So that owner can also use $400 in this 8-week period under the utilities category for 2 months worth of bills for those amounts that were on their Schedule C. So now you're at the 75-25% test. So of what you've spent, we've spent $7,785, $7,385 on payroll, and $400 on the other categories. That payroll number has to at least be 75%, which we're fine in this example because we're 95%. And I would imagine most self-employed individuals will find this out because you really usually don't have a rent for an office, or if you do, it's small in comparison to everything else. You don't have a lot of those rent and utility type expenses. So the total amount that they incurred, that $7,785 would be forgiven. But the result is the entire amount of their loan is not forgiven because they only have $7,785. So that remaining $2,215 will be converted to unforgivable loan and would be paid back over that 2-year, 1% interest period. So this is a great example of everyone really doing the work on this part so that you know that some of this may not be forgivable, which is okay. But I've heard too many times, oh, well, the bank told me I was going to get my loan 100% forgiven. No bank said that. And if they did say it, they did not mean that it was a guarantee. They meant if you can do everything according to this program, then yes, you will be 100% funded. But you can clearly see this person did everything they were supposed to do. It's just they don't have all of the expenses to be able to make it to where it is 100% forgivable. And so, Liz, do you have other questions for me?
Well, I have one. If you use a $10,000 loan number, if you get the loan, you get approved, you get the funds, and you start going through your numbers and you say, I'm not going to meet these requirements, do you have to accept that money or can you give it back?
Yeah, I've heard some individuals that have returned the funds right away. They just decided when they did all of this that it just was not worth it for them. So you can do that. The other thing you can do is that you can see what you're going to need. You can go ahead and do everything you want to do for these 8 weeks. And then you'll know, like, I have this balance remaining. So just go ahead and pay that balance back. What will make this very easy to know, and one of the things we're recommending, and as well, I know Fidelity Bank has been recommending as well, is to open a separate account for these funds and keep it separate. The way I have explained this to my clients and people we're working with is this is the same way we would approach a federal grant that we would have received. I managed federal grants in my background, and that's what we would do. So you would collect all your information for all your expenses that are allowable, and you would submit it to be reimbursed.